One of the favorite ratios that precious metals investors love to look at is the gold to silver ratio, but I hope I can convince you that this is not the best ratio to look at, but even then, there are some gains to be made. So what a lot of investors love to do is to look historically at data, and they'll pick a low point and a high point. So if we look at the last 20 years, there are a lot of low points there around the 40s. So we can conservatively pick 50, let's say 52, because we want to capture all of these numbers as a place to trade silver for gold. And we can pick 80 as a place to trade gold for silver. And as you can see, you go back and forth a few times, and you can multiply your stack by a factor of, let's see, you would increase it by 8/5 every time, and there looks like there's going to be 4 cycles in there. So you can do the math. It's more than double for sure. Actually, a lot more than double. Now, the nice thing about this is that you can continue to grow your collection even as both metals are falling, right? Which they were for some time between 2011 and 2016. And I believe there was also a bear market, right after the Great Recession, right? And see, a lot of people get concerned that because we have a second wave of COVID, that the markets are going to tank again. But I love it because the more the markets stir, the more these trading opportunities come up that I could trade one kind of asset for another, right? Whether it be gold for silver or vice versa, or stocks for gold or gold for stocks. Or there are a lot of things you can do, right? I was actually just going through my portfolio because, not surprisingly, I'm in a low tax bracket this year to see what trades I can make and pay the low tax amounts on what I sell. And I love when the markets stir. My goal is not to have more dollars in my portfolio. My goal is to have more assets in my portfolio, right? Or more precious metals in my stack. The problem with gold to silver is that if we just zoom out a little bit, the ratios have swung a lot more than just from 50 to 80, right? They hit a low of 15 or so quite a few times, right? In the 20s, during the Roaring 20s. This was right before Nixon ended the gold standard, and then during the Hunt brothers, of course. And they hit 100 during, this was World War II. This was right after the collapse of the Berlin Wall in 1990, and then during COVID-19 they were briefly at 120 or so, if I remember correctly. Unfortunately, all the coin dealers were closed, right, and the online coin shops were pretty jammed up as well. Now, the problem is that this is quite a few decades, right? So in one human lifetime, you're lucky to see 2 of these peaks. So that's why I don't like the gold to silver ratio. If you're trying to leave behind a legacy, right, multiple generations, maybe. But you could do a whole lot better with some of these other ratios that I'm going to show you. Here I have platinum to palladium, and this is well within somebody's career, right, from 1970 to 2020. And if we just, at 5 to 1, at 5 to 1, if we trade platinum for palladium, and then down at maybe 2 for 1, we trade palladium for platinum back. That's 2.5 times, and you could do it once, twice, and then 2.5 times, right? So you take 2.5 times 2.5. So 5 times your stack of platinum and palladium, and plus you're investing during that whole time as well, right? I'll let you do the math on that. Now again, there were plenty of times during this cycle that platinum or palladium was falling, right? Actually, both of them were falling during the 80s and 90s. Oh, maybe not palladium. Palladium went into a bubble in 2000 because the Ford Motor Company was trying to stash palladium for their catalytic converters. And the reason this ratio is not going to go nearly as out of whack as silver and gold is because they are imperfect substitutes for one another, right? Both of them are good for catalytic converters and catalysts in all sorts of chemical processes, right? And in the electronics world, we're going to need a lot of catalysts to work on electronics, right? but they're good substitutes for one another, which is why the ratio is never going to go out of whack. We can't say whether other things might replace platinum or palladium, but the ratios between them are probably going to be okay, right? And even if both of these metals start dropping like crazy, I still expect making this trade to be profitable, just because they're going to collapse at different rates, even if they go down, right? Here, in the next two slides, I'm going to show ratios of different coins. Here I have the premium on 90% silver coins relative to raw silver. And if you were buying, let's say in 2009, you had 90% silver and you traded it for silver bars, and then when they hit 1-to-1, you traded silver bars back for 90% silver, and you did that a couple of times. Well, you could make 1.4 times 1.2 times 1.25 your stack over the course of a decade. So that would double or triple your silver hoardings in 10 years, right? Again, even if silver is falling, right, and they were for quite some time during this time, right? The whole time between 2011 and 2016, they were falling. During the COVID crisis at the beginning, right? At the beginning of the financial crisis in 2008, even though the price of silver was falling during that time, your stack has doubled or tripled, and over the last 10 years, overall, silver has done okay as well, and you're multiplying that by 3, right? That's what I love about staying invested, right? There are some people who like to get in and out of the gold market, trading on leverage. The problem with that is that you're not invested in gold the whole time, right? Here, you're never taking any sort of credit risk or any risk of the currency crises, right? Now, silver isn't the only kind of coin out there, obviously, right? When I was collecting coins, I was 13 years old. Silver was very cheap. And I remember thinking, I was looking at the history of the Hunt brothers buying silver. Silver had hit $50 an ounce, and obviously the silver coins followed suit. But the coins that weren't silver, like the Buffalo nickels, or Indian head pennies, or wheat pennies, or whatever people were collecting, those coins hardly increased in the decades of the 70s. And I was thinking, if you had bought those coins and held them for 2 decades until 2000, at least you would have kept up with inflation. Silver would have went down, and obviously that was all I could afford at that time. What I should have done in 1980 was bought rare silver coins, right? Like MS-65 up and up Morgan dollars, and then held them for 20 years. Well, maybe they wouldn't have done so well either, but at least they wouldn't have collapsed like silver did, right? This was the Hunt brothers, and this was when Gordon Brown of England was selling gold and silver, right? And so you would have done okay there, or you could have bought, what else could you have bought at that point in time? Anything that was slabbed MS-65 would probably follow this trend. And if I took this ratio of this trend to gold or silver, it'd probably be a lot more stable than some of these other ratios, right? Just because they're kind of substitutes for one another again, right? Anyways, the thing I like about all of these ratios is that the whole goal of stacking gold and silver is to increase your stack, right? I never pay attention to how many dollars my stack is worth, right? Unfortunately, anybody who's ever looked at my stack or a coin collection, they're always like, how many dollars is this worth, right? I care less about that. I care about growing the hoard, right?